Thank you for joining Market Insights. I'm Jack Thurman, president of BKD Wealth Advisors. It's hard to ignore the looming need to plan for retirement. But are you aware of all the options you have coming into retirement? Today I've asked Lynn Mayab, one of our senior managing advisors and chair of our financial planning committee, to address some of the common questions and concerns about planning for retirement, particularly retirement plan distributions. Lynn, why should clients and pre-retirees really care about retirement plan distributions right now, even if they're working and saving?
It's a good question, and one that people should be thinking about. When people have figured out how much they should be saving for retirement, they need to also think about, well, how are they going to access that money when they get to retirement? How are those funds going to be taxed when they're distributed? And also, what are the required minimum distributions? So how much cash flow are they going to have?
What challenges during retirement could someone face if they're maximizing their savings currently?
That's a good question also, Jack. And what I have seen is there's a lot of news out there and education telling people how important it is to save for retirement. But what is lacking is what happens when you maximize your savings into your 401k or to your traditional IRA. I don't think people realize that in retirement, 100% of that income can be taxable and can therefore put less money in their pocket than if they use some other strategies.
So what do people need to be considering or know or research to determine what is the best strategy, the best fit for them?
I think that people need to make sure they educate themselves first on how are accounts taxed when you take distributions from them. And they can work with their CPA or their financial planner to get that knowledge. Once they know that, then they can make informed choices as far as where do they want to put their money, because say for instance they're going to work part-time in retirement. That may affect when they take distributions. They also need to learn what are the required minimum distributions out of certain retirement accounts and how much money could they expect because of those required minimum distributions.
So for pre-retirees, what can they do right now to maximize retirement plan distributions later?
One thing that I think everybody needs to have in place is a plan to meet their goal, that whatever their savings goal is. Once they've determined how much do they need to save, they need to determine where do they want to save it. At a minimum, people need to make sure they put the minimum amount in their 401k that is going to allow them to get their company match. And then look at, do they qualify to contribute to a Roth IRA? If so, then they definitely need to do that. And then also consider saving into a joint account or a trust account, something that's a taxable account that will add some flexibility for them. So then they've got 3 different sources of retirement income: a deferred account, a Roth IRA that possibly could be tax-free, and then also a taxable account that's going to have cost basis in it. So what that means is they've got different sources of retirement income. All of them are being taxed differently, so they gain tax control in retirement, which can put more money in their pocket. And then they also gain flexibility, because if they want to retire early, they can access their joint or their trust account. They can also use that Roth IRA for a source of tax-free income, and they can also have additional flexibility of being able to pledge their joint account and borrow against it if they need to.
Thank you very much, Lynn. As market events occur or we see financial challenges that impact our clients that we can provide guidance on, we will continue to provide these informational broadcasts. For more information about BKD Wealth Advisors, please visit our website at bkdwa.com. Thank you very much for joining us today.